Rob, Alibaba is turning out to be one of the most hyped IPOs of the year. Is this a great opportunity to get in on the ground floor of one of the great e-commerce opportunities of our time?
Well, at $60 to $66 a share, which is the range set by the company, the stock looks surprisingly cheap. It suggests a price to earnings ratio on last year's earnings of about 30 times, and if growth keeps up, a ratio of about 24 times on next year's earnings, which compared to other fast-growing global internet stocks is pretty cheap.
Well, that kind of growth at that sort of price sounds very attractive, but as a shareholder in these New York listed shares, as they're going to be, how far am I from the profits?
Very far indeed, in three senses. First, you don't control the board. Who controls the board is Alibaba's management committee, which is Jack Ma and 26 of his colleagues. Second, two crucial subsidiaries of the company, the bit that handles logistics and the bit that handles payments, are partially or not at all owned by Alibaba. And finally, there is what's known as the variable interest entities, which are the companies that hold the business licenses and crucial bits of the company's profits. Because non-Chinese citizens are not allowed to own the licenses, these are not owned by Alibaba's offshore shareholders at all.
So, it's a nightmare from a corporate governance standpoint, but as a potential shareholder, should I look through all that and jump into the shares anyway, expecting all that growth?
There is no question that there should be a discount for the governance structure. But given the growth, the opportunity is a good one, especially in the short term. In the long term, the question is operational. Specifically, Alibaba runs on what's called a pure marketplace model. It doesn't touch any goods, it doesn't own any inventory, it just connects buyers and sellers. But remember that in America, it's the merchant model that's won out. Amazon owns the stuff, owns the distribution, is capitally intensive, and has dominated the US market. As the Chinese market evolves, will the merchant model give way to an Amazon-like, the marketplace model give way to an Amazon-like merchant model? That's the hard question for investors.
Rob, the more you tell me about it, the more it sounds like a tantalizing but perhaps very distant opportunity to profit from.
Indeed.
Thanks very much.